Hey everyone, Ryan here. So, you're diving into quant trading, huh? That is awesome. But before we go too deep, let us talk about something crucial. The huge mistake that new quant traders still make. Trust me, avoiding this could have saved a ton of time, money, and frustration. Mistake number 1. Overfitting your models. Let us start with overfitting. Just imagine you are in a karaoke competitions. You practice one song over and over again until you nail every single note. You think you're a star, but then on stage, they change the song last minute and suddenly you are off key and you're out of sync. Overfitting is just like that. Your model performs amazingly well on historical data, like when you're practicing that one song. But when you're faced with the new market conditions, it falls apart. The key is to build a model that is flexible, the one that can handle any tune in the market throws to it. So don't just memorize, learn to improvise. The main problem with overfitting is that it gives you a false sense of security. You might feel that you have cracked the code, but in reality, your model is just memorizing the past rather than understanding the underlying patterns. When the market changes, which is, it definitely will, an overfitted model wouldn't know how to adapt. This is why it is crucial to prioritize simplicity and generalizations in your models. Test them out on an outsampled data, validate them across different market conditions, and always remember that in trading, flexibility beats perfections. Mistake number 2. Ignoring the importance of data quality. Next up, data quality. Just imagine you are making a cake. You have got all the recipe right down: flour, sugar, eggs. But what if your eggs are expired or your flour is full of lumps? No matter how good the recipe is, your cake is going to flop. In trading, your data is just like those ingredients. If it is full of errors or any missing values or just plain messy, your strategy, no matter how clever it is, will give you a garbage result. So before you start cooking up that trading strategies, make sure your data is top-notch, which is fresh ingredients only. High quality data is the backbone of any successful quant trading strategy. Poor data can lead to flawed assumptions, misleading results, and ultimately bad decisions. So think of it like building a house on a shaky foundations. It might look good at first, but it's bound to collapse. So before you even start developing your models, investing time in cleaning your data, filling in some gaps, and validating its accuracy. This may seem tedious, but in the long run, this is what separates from successful traders from those who are constantly wondering why their perfect model keep on failing. Mistake number 3. Focusing too much on backtesting results. Let us talk about backtesting. It is like playing a video game where you can rewind every time you make a mistake and you try again until you just get it right. Sounds cool, right? But here's the thing. Real life doesn't have a rewind button. You can tweak your strategy to perfection on a historical data, but what happens when a game changes? If you are too focused on getting the perfect score in the backtesting, you might miss out the fact that in the real game, or we know as in the live markets, it is a whole different beast. So instead of aiming for the perfect backtest, aim for a strategy that makes sense logically and it can adapt to the new challenge. So start live as soon as possible. Mistake number 4. Underestimating risk management. Now, let us talk about risk management. Just picture this, you are in a casino and you're feeling lucky. So you go all in one bet. It is thrilling until the wheel spins the wrong way and you lose it all. It is why trading without proper risk management is like. It is easy to get caught up in the potential gains and forget that every trade carries a risk. You wouldn't go skydiving without a parachute, so why would you trade without a plan to protect yourself? So set your stop loss, diversifying your bets, and remember, preserving your capital is the key to playing the long game. Risk management isn't just about protecting yourself from the losses, it is about staying in the game long enough to see your strategy pay off. Even the best traders face losing streaks, but what sets them apart is their ability to manage those losses and keep those emotions in check. This means setting a strict rules on how you are willing to lose on any given trades, or you can use some position sizing to limit your exposure, and having a contingency plan for things when the things go to south. Just remember, It is not about how much you make, but how much you can keep. Mistake number 5, neglecting the transaction costs. Let us talk about transaction costs. Just imagine you're making a small but consistent profit and you are feeling good, right? But then you check your account and realize that all those little fees had added up, eating away all your gains. In quant trading, especially when executing some high-frequency trading, transaction costs can make or break your strategies. Every trade, no matter how small, carries a cost, whether it is the commissions, or it is a slippage, or the bid-ask spread. If you're not accounting for this, you could be losing money even when your strategy seems profitable on paper. Neglecting transaction costs is like death by 1,000 cuts. Each individual cost might seem insignificant, but together they can erode your profits and turn a winning strategy into a losing one. This is particularly true for strategies that require frequent trading. Always factor these costs into your models and consider them when evaluating your strategy performance. Sometimes, reducing the number of trades or finding a broker with lower fees can significantly improve your overall result. So there you have it, the huge mistake that new quant traders still make, and how to avoid them. Remember, trading is a marathon, not a sprint. So take your time, build a solid foundations, and keep on learning. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update. And if you have made any of these mistakes or you learn from others, drop a comment down below. So see you on the next video. Happy trading. Bye.